Indians have a strange housing problem. It's not that people do not want to buy homes. Actually, the homes that are being built are not for them. While luxury towers rise in every metro, affordable homes are silently vanishing. And the gap between demand and supply is now the widest in over a decade. Hi everyone, welcome back to Behind the Headlines, a series where we cut through the clutter around trending news and show how it really affects you.
Procuring by companies benefits need to be passed on to consumers.
Today we are breaking down an issue that's silently growing but affects nearly every Indian city: the rising gap in affordable housing. We'll look at three things today: why affordable housing is becoming harder to find, how GST on cement is involved in this, and if the recent tax cuts can actually solve this problem. Let's get started. But before that, we've also made a detailed video on E20 fuel highlighting industry leaders and policymakers' comments on the same. You can check it out, links in the description. Sabse pehle, let's understand the ground reality. Everyone is talking about rising house prices, but when it comes to affordable housing, yani homes priced under 45 lakh rupees, that's where the numbers are a bit problematic. According to a joint study by Crore, Colliers and Liasis Forest, India is building only 0.36 affordable homes for every unit sold. That means the number of people who need affordable homes are way higher than the number of homes that are available. In fact, India could face a shortage of nearly 30 million unaffordable homes in urban areas by 2030. The situation has worsened in metros in Mumbai, Delhi, NCR and Bengaluru. Affordable housing supply has dropped nearly 70% in the last 5 years. Shishir Baijal, Chairman and Managing Director of Knight Frank India, has said that affordable housing is not only a social priority but also an economic necessity. As India urbanizes rapidly, the imbalance between supply and demand in this segment poses a significant risk to inclusive growth. So what exactly happened? Reason 1. Developers are moving up market. Luxury and premium housing is booming because that's where the margins are and people are also capitalistic in nature. Crore data shows that developers are increasingly focusing on homes priced above 1 crore rupees to earn more money. On the other hand, affordable housing projects are becoming rare because land prices have gone up. Input costs for cement and steel are high. Approvals and funding for budget housing take much longer. Reason 2. Urban land is expensive. Affordable housing depends on cheap land, usually on city outskirts. But that land is no longer cheap. Now add land ownership issues, delayed approvals and high holding costs, and you may understand why developers find it easier to build premium housing and not budget homes. And India's rapid urbanization, with over 600 million people expected in cities by 2030, has pushed up land demand and its prices everywhere. Even peripheral areas are seeing a price hike due to metro projects, highways or speculative buying. So even when the demand is high in the range of 20 to 40 lakh, land economics simply don't support supply at that price point. Reason 3. Subsidy schemes have slowed down. Schemes like the Pradhan Mantri Awas Yojana helped drive demand earlier, but the pace of new approvals has also reduced. In several states, implementation delays and fund release issues have stalled many affordable projects. The scheme aimed for 11.2 million urban houses by 2022, but only about 6.5 million are completed and occupied today, showing that the pace has incredibly slowed down. This is why the government also extended deadlines to December 2025 and launched Pradhan Mantri Awas Yojana 2.0 to build another 10 million homes over the next 5 years. Now, all of this has created a paradox. More Indians need affordable homes, but fewer are being built. On September 3, the GST Council made a major announcement. The GST on cement has been cut from 28% to 18%. Now, this is big because cement is one of the costliest inputs in any housing project. In fact, cement and steel together make up over 50% of construction costs for affordable homes. So what does this tax cut mean? Let's break it down. Cement prices could drop by 20 to 30 rupees per bag according to developers, as quoted in the Times of India. Now this can reduce overall construction cost by 5 to 6%. Developers say that they will pass on most of the savings to home buyers, especially in affordable projects where pricing is extremely sensitive. Now for a 500 square feet flat, the total price reduction could be around 60,000 rupees to 75,000 rupees depending on the location and materials used. That may not sound like much, but for a family whose total budget is 20 20 to 25 lakh rupees, even a 3 to 5% cut is meaningful. It could also push more developers to reconsider budget housing projects, especially in Tier 2 and Tier 3 cities. Crore and Naredco, India's largest real estate developer bodies, have welcomed this move. In fact, they've been asking for a tax deduction on cement for years. Naredco chairman Rajan Mandelkar has said that GST cut will benefit both developers and home buyers. This was a much needed step to revive the affordable housing segment. But experts also point out that the cement GST cut is just one part of the puzzle. For affordable housing to truly grow, we need faster approval systems, cheaper credit for developers, stronger execution of Pradhan Mantri Awas Yojana in Indian states, and availability of land at reasonable rates. But still, the GST cut is a huge signal. It shows that the government wants to remove friction in the supply chain and revive real estate as a job creator. Now, how does this affect you? If you are looking to buy your first home, especially in the 20 to 45 lakh rupees range, this tax cut could mean lower EMIs or better value for you. On top of the GST cut, the RBI has slashed the repo rate by a full 100 basis points since February 2025, bringing it down from 6.5% to 5.5%, making repo-linked home loans noticeably cheaper. Now, developers may launch new projects in this price band over the next 6 to 12 months, especially in growing cities like Nagpur, Indore, Lucknow, and Coimbatore. But do not expect instant price drops. These changes take time to filter down. However, if cement prices stay stable and GST input credits are passed down properly, we could see a more active affordable housing market by mid-2026. India is in a unique moment. Urban migration is rising, nuclear families are growing, and first-time home buyers are entering the market younger than ever before. But we are also at the risk of turning into a country where housing becomes aspirational instead of accessible. Now, whether this policy becomes a turning point or just another headline will depend on how builders respond, how states cooperate, and how quickly savings reach the consumer. Until then, it's a cautious but a very important step forward. Well, that's it for this episode of Behind the Headlines. Did this help you understand the real story behind the GST cut on cement? Drop your thoughts in the comments below and let us know what topics you would like us to cover next. I am Maharshi and I'll see you next time with another story that deserves a deeper look. Until then, stay informed, stay sharp.